So, David, what is the most effective way that expats can transfer large amounts of money from the US to the UK in order to avoid potentially high fees?
For sure. So let me. I'm gonna share a presentation today just to give us just a bit of structure and linearity to the conversation. Okay. So I think the best way to approach the question is to look at the problem and then talk about the overall sort of solutions and the issues that can be faced when moving money abroad. Certainly when we talk about higher value. For the benefit of the conversation, I'm talking about sums really upwards of sort of £10,000, which is where the compliance flags kick in and where not problems arise, but whether the complications start to occur. There are five main points to the presentation I'm going to share today. Risks of buying another currency, so the associated risks with moving money internationally, the benefits of using a consultant like ours, a short case study on a client case that we've helped with recently, and then a little bit about how you would choose a consultant or a provider generally, the main options that are available to anybody that's moving money internationally, whether that's a business or an individual. So let me start first of all with the risks. So as we know, FX is a very sort of volatile market. It's a never ending market from a point of view of it's open 5.5 days a week, opens Sunday night in Asia, closes Friday night in the US, and it moves non-stop. Now, this is moved broadly by the economic fundamentals of any nation. So the US, the UK, Europe. The best way to think about it is currencies are the stock of any nation. So if you think about it from that point of view, it makes it slightly easier to rationalize. And the impacts that we look at for as analysts is what's moving the market at any one point or any day or period, and what factors or events are we faced during the period at which a client is looking to move those funds. So if somebody is emigrating, for example, they may be looking at a 3 to 6 month lead-in time. So we will analyze the market over that period and try and identify where issues may come up or where the market may shift, especially erratically. Now, there are obviously things like black swan events, which we can't forecast. An example of that can be the trust event or wars or pandemics, whatever that may be. Those things we literally have to manage as they arise rather than try and forecast them because we can't. Intraday data release is simply economic data that is released on a daily basis throughout the market that does have intraday impact on how rates move and how they fluctuate. Politics are also a big issue right now, especially we've just had our own election here in the UK. We've seen very clear price action around that, and that's actually a very good example, not one I'm going to go into now, but it's a very good example of how markets move and how they trend. The next step, obviously, is the US election. That's a really important factor coming up, and that's going to start coming very much higher in the priority list in terms of how we're looking at ongoing price action. Transactional impact. It ties in really with these two slides are quite similar in terms of what I mean by transactional or operational impact is we've looked at the markets very briefly and how they trade and the necessity to keep an eye on those rates essentially and how they're impacting. When I talk about operational or transactional impacts, I'm talking about the physical movement of funds. Now, there are three main ways to move money internationally: banks, brokers, and fintechs apps, essentially. Now, they all have positives and negatives. Banks, largely, I think, being completely, trying not to be too obtuse, but banks are typically the worst of the three because they are very expensive, very poor in terms of service, very hard to generate or create any kind of relationship or care and attention around a particular use case, and very hard to communicate with, which is where apps solve a big problem in that respect because they're very automated, they're very clever, they're very, very easy to use. But again, when compliance issues arise, when you're sending large sums of money, very often flags, sanctions, stops on movement of funds can occur. Apps fail here because you can't call them simply, which is where a business like mine or ours it performs much better because we are very high touch, one-to-one with each business case. We understand the use case, and therefore we are able to react to any issues that may arise. And this is particularly important when it comes to settlement. If you send $500,000 to the UK or Europe, it is likely to be flagged and sanctioned and require additional paperwork at some point, which is where the former two don't perform very well. We've talked about market risk there. We've talked about settlement a little bit. The items here, we've got source of wealth, KYC, account, SWIFT, GPI. This is simply the requirements that the paperwork required to move funds internationally is quite strict. And this can either be front run and managed well so there's no friction, or it can be an afterthought, which is where problems can arise. Again, something that's a really important, should be the primary aspect of making large international payments. Case study. So this is a UK client we had, a US client moving money into the UK. They were selling stocks to buy real estate in London. They were unsure of the process, and we were able to provide them a very, very close service around, one, exiting the equities, and two, moving the funds into the UK. Now, what we're able to do is collect dollars in the US and bring them to the UK for them, rather than expecting a US bank to do that, which is can be a very stressful situation because they are not particularly geared up to making, believe it or not, US banks are particularly poor at making international payments. So we were able to save a large amount of money on fees and transaction costs, infinitely better rates in terms of the rate they achieved, and strategic gains. We're talking about timing and execution of that transaction, helping them understand the market so they could enter the market at a time which was more beneficial. Deal management is simply where any additional KYC was required or paperwork, we were able to ask for it and gather it quickly and move on quickly so that they didn't feel delays or any friction when moving into their associated real estate transaction. Talk about consultants, choosing the right consultant. Again, this I think I've probably touched on this already, and that's really down to the use case. If the numbers are small, apps are great, they perform very well, they do a very good job. But when the numbers get larger and there is a need to and a desire to want to know where money is at all times, these types of businesses like mine do a much better job because you can communicate, and communication with these transactions is really important. Remember, world compliance has become far stricter over the last 10 years, far more kind of clunky, really. It hasn't improved. And world banking and world transactions or international payments haven't become the one part of finance that haven't improved. They've actually got worse because of the need for checking, AML, money laundering, and things like that. The only way to manage that is in a very hands-on basis. So I think to that point, that should hopefully cover off most of the question that was asked. And I think it really, like I say, to sum up, it comes down to the most important thing, in my opinion, is making sure that money goes from A to B without any friction or stress. To achieve that, it often takes quite a lot more sort of help or manpower than just relying on very cost-effective but very poorly from a efficiency point of view, apps, etc., don't perform so well.
Great. Thank you so much, David.